Welcome to Business Reporter's The Future of Customer Experience campaign. I'm Rachel Hicks. Syndicated lending is big business. The estimated size of the global market currently stands at $4.5 trillion per annum. However, while over the years banks have invested heavily on digital back-office systems and new mobile apps for consumers, the highly sensitive business of syndicated lending is still in many ways stuck in the dark ages. It's slow, inefficient and far riskier than it needs to be. But all that is about to change thanks to a new software solution called HUBX. Before creating this platform, the two founders cut their teeth in investment banking and realised the true potential of a solution that makes syndicated lending smarter, efficient, connected and safe. Today we're joined by the co-founders of HUBX, Axel, Coustere and Stephen Ong. Good morning, gentlemen.
Good morning. Good morning.
Now, tell me, give me a taste of the syndicated lending process as it's commonly managed today, and what are the main points for the banks?
The market hasn't changed in 30 years. A lot of the innovation we've seen has been in the back office. When it comes to the front office and the way that these large banks collaborate, in an environment where it's increasingly global, it used to be a market that was more localized. Deals are bigger and bigger. There are transactions where you might have 2,000 lenders today, where you might have had 100 15 years ago. More and more banks are coming into this market. And at the same time, they're under extreme pressure. They're under pressure to do more deals, to earn the fees, under pressure to be more efficient, and at the same time, under pressure to use their balance sheet more efficiently. So what that means is, today, when you look at the average deal, it's 85% manual. It requires about 20 steps between the borrower, the lead arranger, the lender, and all of that happens essentially by email and spreadsheet. So very hard to interpret data, very hard to understand distribution risk, and very hard to scale.
We have stock exchanges for independently managing the transaction of shares and bonds and equity. Why don't we have an exchange for syndicated lending if the potential gains, as we've discussed, are so great?
Now, one of the key attributes of an exchange is that it's centralized. And they also transact in standardized assets. There are so many variations of loans that it's not standardized yet. So it's not appropriate to have a stock exchange model for the syndicated lending market.
So what's your solution, and how is it different from a traditional exchange?
Well, HUBX is an end-to-end syndicated lending solution. It takes the journey all the way of the transaction from the origination, distribution to the settlement of the transaction, because we integrate with a back-office solution called Fusion Loan IQ. And what the main difference in what we HUBX's approach is that we deploy our solution into a bank. So the bank gets its own branded platform. It can protect its data, protect its networks, do all the transactions in an efficient, digitized way. It can also syndicate with other peers, because HUBX allows the bank to share the relevant information with other banks to do that transaction. In a nutshell, if you imagine HUBX will be a decentralized approach for banks to transact and syndicate loans between each other, yet manage all the relationships and the transaction elements with their borrowers and lenders within their own network in a private environment.
So can you tell us how this platform would work with a deal of $100 million?
Today we talked about how a deal like that would work, which is essentially emails and spreadsheets. Now imagine a new scenario where an origination platform is connected automatically with HUBX. That is connected with a back office system like Fusion Loan IQ. And from day one, you have every borrower, every deal, every facility and underlying lender all connected in one place. So from day one, you have analytics you've never had at your fingertips. So for a deal, a $100 million deal, for example, the borrower can express interest through the origination platform. The relationship manager can maybe consult with their front office teams. Maybe feedback can be gathered from lenders on a private platform before the mandate is awarded. Once the credit decision is approved, that bank can then reach out to lenders from one place in a branded environment. They can invite the lenders to review the opportunity, give feedback. They can track all of those conversations dynamically. At the same time, they can invite joint book runners or agent banks to in their investor network. So go beyond the internal network of the bank. And once they've done that, they can build the book, conclude in terms of the final amount and orders, and then push that automatically into the back office systems. So you have a true end-to-end process where now you can manage the life cycle of the loan, amendments, waivers, all of that data is in place. You have the data rooms and the tracking all in place, and you can effectively do a deal in half the time, compared to the 9 months or 3 months it might take normally today.
So other than the speed of the deal, compared to the manual way of managing the deal, what are the tangible benefits?
The first one is you're working smarter. You have better analytics. You have a place where you're leveraging insights across the organization and beyond. And so you're working in a way that you're reacting to change, you're reacting to lender preferences, their interests at any given time. Those things no longer require a face-to-face meeting. So the next phase is you're able to make sure that there's a single source of truth across the organization and beyond. So you're ensuring that lenders are updated when they should be updated with the same data that everyone else is looking at. So you're looking at effectively the bank with the same size team, being able to do more transactions, being able to collaborate with more banks.
So if I am a bank and I want to start working together, how does that happen? How does it look?
You can deploy a solution like HUBX within weeks. And so that really, much of that time is focused on being able to test a deal in a sandbox environment, making sure that security and IT have a chance to review the platform, understand how it operates, whether you make decisions whether or not you want that on the cloud or whether it's on premise. But once all those things are in place, you can roll it out within a matter of days, and it'll come connected out of the box with a back office solution like Fusion Loan IQ.
From your expert viewpoint, how do you think syndicated loans will develop over the next decade?
As more and more banks adopt HUBX, you're going to see the connectivity become digitized. We see a future where loans will become digital assets. They will have their covenants and various attributes managed by smart contracts. And so we certainly see a fully digitized syndicated lending market within the next decade.
Stephen Ong and Axel Coustere from HUBX, thank you very much for coming into the studio today.
Thank you.